internet's turned on.
Well, whether or not the internet knows that we're here, we're here. We're here.
And we're talking no matter what people want, you know.
That's true.
I sound a little echo. I hear it a little echo. Anyways, welcome.
So I'm William
people.
Swanson. I am the chief architect, coder kind of guy here at Edge, and I write software. And you are?
I am Brett Musser, and I handle business development and content. So I write a lot of things and tap the keyboard a lot, and then talk in the office, and then I might talk to other groups. Anyways, so welcome back to our weekly Q&A. And remember, you can always put questions in the chat, and me and or William and I will try to answer them the best that we can. But we got a lot of juicy topics to talk about today.
A lot of good stuff.
We're going to lead off with some boring stuff but important stuff, which is IRS tax guidance, new guidance on forks, and maybe even like new sections on the 1040, I guess, paperwork that most people are used to. Ooh, I can hear some.
Who's got their speakers on?
I think it's me. Sorry about that. So the IRS just came out with some guidance on forks, and basically saying if you received new cryptocurrency as a result of some type of hard fork, and you will have to claim that as income, right? And that's kind of a weird situation, because sometimes people might hold their crypto on their own, and they might not even know they have some coins, or an exchange might hold it on their behalf, right? And they might not even want it. And are they supposed to report that? Right? There's all kinds of like weird contingencies that don't necessarily make sense.
Let's step out and talk about the big picture of crypto taxes. I actually don't think this is boring. I actually think this is kind
of. William likes it.
I don't necessarily like it, but I think it's interesting.
Okay. So what's interesting about it?
Well, it kind of all started about 4 or 5 years ago when the IRS issued their first opinion about what you would do with cryptocurrency. Because the question was, is it a currency? Because if it's foreign currency like euros, then that's one set of rules that applies to it. But if it's something else like a stock, that's a different set of rules. And they effectively ruled that it was property.
Well, the IRS did.
The IRS ruled that it's property. The SEC rules that it's security. Every agency of the federal government has ruled that it's whatever thing they regulate.
Exactly. They want to have some type of say over it.
Yeah. So the SEC is like, oh, these cryptos are securities. Mm-hmm. You know, so they're stocks. We're going to regulate them like stock. And then the IRS comes out and is like, well, they're cryptos, therefore they are property, and they're not. It's like, well.
And the CFTC says it's a commodity. Right.
Yeah, pick one, guys. Pick one and be consistent about it. I don't want every agency on earth telling me that it's their thing, because it has properties of all of them. Or maybe that's just the situation we deal with. I don't know. So anyway, it's property. So how do you deal with property like gold or silver coins or baseball cards or whatever? You buy it at a certain price. That's kind of your starting. They call that basis, yeah. Right?
Cost basis.
Cost basis. And then you sell it at a different price. Now, if that new price is higher, the difference between what you sold it at and what you bought it at, that's your profit, because you made money off of selling.
And you're going to have to take some type of percentage and give it to the IRS, depending on if it was a short-term or a long-term gain.
So there's actually an exception case, where if it's been held in your possession for longer than a year, you have a low tax rate of 15%. And if it's been held for less than a year, you have just whatever your normal tax bracket is. So if you're making $100,000, that'd be like 20% or whatever it is.
Interesting. Gosh.
Now for state, there's no such exception. The state of California, at least, it doesn't matter how long you held it, just gets taxed at the normal rate. But for the federal governments, they're making an exception for things that are over a year, so that's what you do. So anyway, that was the situation, and it seemed fine, and you could choose some trading, you could account for how much money you made or lost, and you could take those losses, take those gains, put them on your tax return, everything's great, if you chose to. I mean, not a lot of people did, a lot of people kept it private, and now the IRS is beginning to start to enforce it and start to look around for who's holding out on us, who's got this massive gains that they didn't report.
Yeah, it's interesting on how they would enforce that or know who got what. I think they're definitely going to be relying on self-reporting, and they often do rely on self-reporting, and I think that might be one of the better governing mechanisms, is being able to get people to report things without forcing them. You just kind of
So
scare them into doing
I have a
it.
feeling that their strategy going forward is going to be to kind of crack the whip,
Mhm.
maybe crucify a couple of high-profile figures, really
Yeah,
really
make an
them-
example, right?
Exactly, and
Yeah.
then kind of get everybody else scared into just kind of reporting. And then at that point, that's kind of the best situation. If they're not super like analytical about it, they expect people to report. That means you can, there's enough wiggle room that you can still live your life without being super paranoid about every transaction. But
Yeah.
still, they're getting what they deserve. So, I mean, I think there's a good compromise situation there. It's like, if I mow my neighbor's lawn and he gives me $20, technically that's taxable income.
Yeah, yeah.
But
most people are gonna-
nobody bothers with that because you can't. It's
And
just,
the IRS doesn't really,
they
they're
don't really
not
care,
about
right?
that.
So that's kind of the situation where hopefully it gets to the point where most people are self-reporting, and then we don't have this super draconian analysis and like every little penny is going to be accounted for, because that would be a nightmare situation.
It would be. And if you want to learn more about how they're treating forks, you can go to their website, and they actually have a big FAQ on cryptocurrencies.
Well, so the problem with forks is if I have a Bitcoin wallet full of Bitcoin, and all of a sudden Bitcoin Cash happens, and now I've got Bitcoin and Bitcoin Cash in equal amounts, that's considered income according to this ruling,
Yep.
which is terrible because I didn't choose to have that money come to me. I didn't
Yeah.
even know it came to me.
Yeah, and if you're really anti-Bitcoin Cash, you're like, I didn't even want that.
Yeah.
And then you might have sold it, and not only did you have to treat that as income, you have to you have to take into account a possible capital gain. But it also could work in your favor if you have a capital loss. But
So what could happen is if the Bitcoin Cash splits and the price of Bitcoin Cash is $300 on the day it splits,
yeah,
then that's your basis for those new coins going forward. So if you sell them at a lower price, then you have this $300. Let's say you have one Bitcoin in your wallet, right?
Mhm.
And then Bitcoin Cash splits off at $300. So now I have one Bitcoin, which is still worth whatever it was before, and then a new $300 income because of this newly thing that was added to my wallet. And if I sell it a month later at $300, then I'm collecting the income is actually real. Like I've actually realized that it's in my wallet. I can spend that money on whatever I want to spend it on. But if I wait and the Bitcoin Cash crashes to $0 and then sell it, now I have a capital loss that can offset the capital gain, and therefore it washes out to zero anyway.
Now, this is more official guidance that has come out, but there's also a report that came out this morning that they're going to be asking people on those 1040 forms that a lot of people are used to, whether or not you hold crypto, which they didn't before. So this isn't something that has happened. It's a kind of a draft that's kind of been I guess propagated amongst accountants and lawyers in the cryptocurrency space, and it could be another thing coming down the pipe where you have to actually
Check the box that says you have
have
crypto.
exactly. So so some interesting things to keep into account, and also it should be known that in Edge you can export all your transactions into a nice CSV file that'll have a lot of things organized for you
Yeah, that
if
was
you have
super
any
helpful.
issues.
Yeah, that was super helpful.
For you
Yeah.
can talk. I don't know if you want to talk, but that's another story. But it can be very helpful.
So I actually have paid my crypto taxes. I made enough money in 2018 and 2017 off of selling. Just not that much. I mean, it was it's not that much, but really it was enough that I was worried that I'm like I don't want them to figure out that this happened and then come after me later. So I decided I'd actually buckle down, do my accounting, and actually pay the tax. And it was super annoying, but having that data in Edge was very, very useful.
All right. So moving on from the IRS, let's move to another three-letter, not agency, but let's say network, EOS. I know we were having some issues in the office with some things, but we were able to kind of figure them out, and we kind of learned some things about EOS in the process.
So if you're
for those that are interested in
if you're
EOS.
using Edge right now and you have EOS, you may notice that when you go into your wallet, that the balances aren't updating right, and if you resync your wallet, it'll actually go back to it won't remember that your name is associated to that wallet. So we're kind of in a broken state right now. We're kind of panicked about it because it's a big problem. And what we were using a block producer API that went down. They went offline. They're no longer available. And so we're trying to figure out, okay, well, what can we put into the app that can connect us to the EOS network and begin retrieving balances and show all the things that you need in order to use it. And so one of our guys found a list of 90 block producers and or potential block producers.
So I think there's supposed to be 21 at any given point in time
But
that are
there's-
voted on, but there's this big pool
Pool.
out there that could be block producers.
Right. So there's like 90 of these guys. And so we're like, okay, well, should be great. We'll just throw the 90 of them in and there should be plenty that will work, right?
Yeah, that's what you'd hope.
So what you hope, right? So he went through and he actually, well, first of all, the names of the things were websites. They weren't actually like where you go to connect to them. So we did that filter, that got rid of half of them. So we had like 40 actual like things to connect to see if it even works, right? And then we go down that list and we try connecting and fetching some information. And we get like down to 10 that are like servicing requests, 10, 15 that are actually like online, able to service basic requests like balances.
So like 11, 12% of them.
Yeah.
Yeah.
And then we said, okay, but we don't just want to know what the balance is. We also need to know what the name that goes with the account is, right? What was the name that you registered? And we did that. And then we got down to 3. There's 3 block producers online right now that actually can answer the question, what name goes with what key.
And this is basic functionality.
Kind of. I mean, I'm not quite, it's kind of frustrating because the whole social contract of EOS was that by getting paid all these big bucks to be a block producer, that you were going to run this infrastructure for the network to utilize. And it's just not happening.
Yeah, or at a very, I guess, a very small rate, a very underwhelming rate. They're able to service it.
Yeah.
It should be fairly easy for us to do that, and you guys had to do a lot of digging for that. So, tisk EOS, get your shit together.
Well, I think what it kind of goes to show is that incentives matter in these blockchain projects. Like you say, well, we're gonna have people vote on these projects based on how cool they are, and part of that social contract is running this API for wallets to connect to. People aren't doing it. Well, that goes to show that it's not really the incentive, right? People aren't able to judge whether or not these people have a working API, and therefore aren't able to put their money where their mouth is.
And I guess there's also a tendency for people that have never worked in open source software to just assume that things will get done. Well, they're only done for certain reasons, and they're not always done, right? A lot of open source projects will die because there's no real incentive, people aren't inspired or whatnot. Not saying that EOS is, on the fritz or anything like that, but there's definitely work to be done so service providers like us can give people access to the network, right? Okay. So
anyway, that's just a little rant.
Is there anything else about it?
I
we were able to solve the problem, kind of.
Well, I'm working right
When I
before.
say we, William, I didn't do it.
Immediately before I hopped on this podcast, I was just putting the finishing touches on the build, and we'll get it out into the app stores over the weekend. So, I mean, assuming all goes well with QA and such. So.
Nice. Okay, so now I big story coming out, and people have been talking about it for a while, but there's a lot of confusion. There's always a lot of confusion about Ethereum because it is confusing. So there's this terminology of, we've had Ethereum 1.0, since I guess 2015 when it launched, and they're looking to move to something called Ethereum 2.0. So it's some big upgrade, and there's been some comments that, I haven't particularly liked, but people on Ethereum are kind of working through them, but basically acknowledging the first go around is not scalable, right, or does not have, I guess the necessary architecture to really power the world computer that they're all trying to build, but they're all saying, hey, ETH 2.0 will be the thing. And I think the two big things that will change from ETH 1.0 to ETH 2.0 is moving from one consensus algorithm to another, and also this concept of sharding. So the ETH 1.0 is powered by proof of work mining, just like Bitcoin. So miners are going to expend a lot of energy and produce blocks and secure those blocks. And they also, all full nodes see a full copy and full history of the Ethereum blockchain. And it seems like, or from what I've read about ETH 2.0, the two main changes are changing those two things. So we're going to go from proof of work to proof of stake, where miners or validators just put up their Ethereum, they stake it, so if there's any bad behavior, they would lose it, right? So it kind of incentivizes good behavior, and then they're also going to move over to something called sharding, which I think is a pretty complex topic and something like I have no idea if it'll work, and I don't think anyone else really knows either, and they're doing a lot of research on it. But I wanted to. It's hard for me to really explain sharding in any detail. Like I kind of get it when I think about it, but I wanted to kind of ask you, how you visualize it and what you know about it, and maybe some things that are good and some things that like you don't know, and like things that still need to be done to make it a secure system.
Well, right. So on any sort of cryptocurrency, the main thing that kind of makes the currency a currency is a ledger, right? When I have a Bitcoin, I don't physically have a coin that I put in my pocket. No, it's an entry on a ledger somewhere that says...
Lives on an Excel spreadsheet.
Yeah, it's a giant spreadsheet that basically says this money now is yours, and then if I send it, I'm just making another line on that spreadsheet that says now it belongs to you or someone else.
And private keys are the things that give you access to those units to move them.
Yeah, only the person with the appropriate key can add those lines to the spreadsheet. And then the miners are responsible for like checking off on the spreadsheet and coming to an agreement on, because you could have multiple copies of a spreadsheet, right? I could make a document on my computer, edit it one way, send it to you, you edit it a different way, and then we have two divergent histories.
Yeah.
So it's very important in order for this spreadsheet concept to work that there be a single spreadsheet.
Both of our spreadsheets show the same thing, and we can both see the same thing.
Exactly.
And we call that a global view.
Right.
Is that a good term for it?
Kind of a global concept. So that's the typical cryptocurrency approach.
And that's how Ethereum's working now, where every node on the system has a complete
Copy
of that big Excel spreadsheet.
And the process for coming to an agreement on which spreadsheet to go with is a process of mining, and mining is effectively using energy to say that, and the one that has the most energy behind it is the correct spreadsheet.
Gotcha.
And obviously, burning lots of electricity is not necessarily good for greenhouse gas emissions. Now, there could be an argument that it's not that bad compared to the amount of, I mean, you go look behind us, you see San Diego City, there's all these big tall buildings that are skyscrapers owned by banks, right? And how much carbon emission are they putting out? So one could argue that the carbon emission is actually less for Bitcoin and proof-of-work systems, but it's not zero.
It takes a lot of energy.
Yeah, so the idea is, well, we'll just use money to agree on which spreadsheet is the correct one. Well, everybody will vote to make a delegate kind of person, and that delegate then gets to stamp, this is the one.
And then the thought is, if you do something malicious, or you add in some inflation that shouldn't be there, or confirm some transactions that are invalid, you would lose your money.
Right. Yeah. So that's proof of stake. So we're going from energy to money, basically, and money represents energy. So it kind of could be argued to be the same thing, but it's also self-referential because we're using the spreadsheet about money to agree on who has the money, which determines who gets to vote on the spreadsheet, so it becomes this self-referential thing. So there's enormous amount of research that the Ethereum people have done on how to make that system actually work in a way that can't be cheated. Because it's so self-referential, it's very tricky to get it to go.
I'd say the amount of people that actually understand that research is very small, right? And probably 90% of them are in Ethereum, or maybe around it a little bit.
So that's one project that they're working on. The other project, so we reduced the energy consumption, so what? That's not going to make Ethereum any better from a user's point of view. They're still going to have long confirmation. I mean, confirmation times might be faster, but you're still going to have the issue of
throughput and speed,
Yeah,
right? Just getting things through and doing things fast.
Yeah, the network can still clog up.
Yeah, just because we moved away from energy to an economic state doesn't mean it's now scalable.
Right. So the next step is not to have a single spreadsheet, but instead to have multiple spreadsheets.
So now I have I'm going to use their language.
We can
I have
have-
my own shard, you have your
So
own
they
shard.
call the separate sheet shards, right? So you could have you could imagine, this is not how they work it, but you could imagine a North American shard, a Europe shard, an Asian shard, just for the mental clarity of that.
Yeah.
So there's the North American spreadsheet and the Asian spreadsheet. So if I'm sending money from someone in North America to someone else in North America, doesn't matter. It just goes on that one spreadsheet, and the Asia people don't have to record it, they don't have to notice it exists, they don't care. Neither do the Europe people. Only if I send money from North America to Europe do our two spreadsheets now represent that transfer between each other.
Okay, so is there like a intermediate spreadsheet that's like on top of
So-
ours?
so
Like, how do they communicate?
The actual architecture is kind of tricky, but you could imagine sort of the meta blockchain, which says this spreadsheet, the North American spreadsheet, has $1 billion in it, and the Europe spreadsheet has $2 billion, and Asia has another $1 billion. And if I transfer money from North America to Europe, that's going to be recorded as like this spreadsheet now is less, that spreadsheet now is more. But then within that, nobody cares.
Gotcha.
That would be one way to do it. I don't think that's how they're doing it, but that is a mental way you can imagine.
Is there an ultimate reconciliation of, and will there never be a global view of Ethereum?
Yeah, that's kind of the idea. You don't need a global view. What would you need this global view for? As long as the money is all there and there's no like money being created out of thin air, then it's all good.
Okay. And what are the issues that you see? Sounds like a lot of complexity to really manage.
It is a lot more complex, and there's a lot of issues that, as far as I'm aware, haven't been thoroughly solved, but are close to being solved. Mm-hmm. So one of the issues is, say I decide, to send money to Europe from my North American spreadsheet to my Europe spreadsheet. We're going to do that. Well, how does Europe know that the money that was being sent them actually belongs to me?
Yeah, because they don't have a view of that spreadsheet.
Yeah, they'd have to go through the whole thing, validate in order to be sure it was mine.
Gotcha.
So anytime I transfer between, you always have this question of trust, like, well, I'm willing to accept the money, but I'm not quite sure that this other spreadsheet is.
Well, you're blind to that spreadsheet.
Yeah, you have no idea where it's coming from. Yeah, you don't know where the money's coming from.
So is there a specific answer for that?
So the answer that I've read about in the Ethereum wiki is basically you'll have validators who are responsible for validating things, right? Transactions are good and so forth. And what they're going to do is going to have overlap. So one validator might do North America and Europe together at once.
Okay.
So he sees both and he can check transactions between them.
Gotcha.
Another validator might do Europe and Asia together at once.
Okay.
Another one would do Asia and North America. So you can validate pairs. So if somebody tries to cheat in the Euro spreadsheet, you're going to have two different validators who notice that problem.
Okay.
And any transfer to any other spreadsheet would also be checked, by the people who care about those spreadsheets. And so you end up kind of have this people checking each other.
So you have like some validator nodes that are very specific and insular on one shard, or it almost sounds like another chain that you have to manage. And then there might be nodes that are kind of straddling a couple different
shards, yeah.
Right. So managing that whole process is really complex. So we'll see if they're going to be successful in doing it. And like you said, it's complex, so that opens up like security, I guess, vulnerabilities that.
Because like if you get to pick what shard you're checking, then you might pick the shard that you're going to do fraud on if you intend to do fraud. Right.
Right.
Like a fraudulent actor might choose to. I'm going to make a new shard for Antarctica because nobody lives there, and I'm in complete control of it. And I'm going to do some fraud over there, and then cheat these other guys.
It definitely seems like the Ethereum development community has always been going for like good enough.
Yeah. So their solution to that is you don't get to pick
Very
which
practical.
shard. You actually get assigned by randomness which one you're checking in a particular day. Stuff like that. So there's all kinds of game theory that's going on. It's like, well, if I wanted to commit fraud, I'd have to get really lucky because I get randomly assigned to the wrong shard, and I have to do this, and I have to have all this money, and I have to, so the idea is the game theory is enough to prevent that from being a problem.
Yeah, so this can give a lot of ETH investors some anxiety of how are they going to manage this whole, I guess, transfer from ETH1 to ETH2, right? Are they going to, and I haven't seen anything about how are they going to move assets over in a safe way, right? There might be, there's one thing to set up a new network, another thing to kind of move those old assets over and kind of credit them on this other chain. I feel like that migration could be
messy.
Pretty messy,
It
right?
could be handled like a hard fork. You just say on this version, boom, that's when the last block of the old chain was produced, and now we're on the new.
So,
and the node software just knows how to update.
Kind of had a random thought because I saw the other day that the CFT's chairman, CFTC, which is some type of futures trading commission, they said that Ethereum's a commodity, right? And I was thinking about, all right, what's a commodity? And it's usually like some type of physical good that required some like. Usually
oil.
And it usually required some energy to produce. Mm-hmm. When you move from like a Bitcoin has been considered a commodity, and you need some energy to produce it. And right now, Ethereum doesn't.
Or won't.
Won't. It won't. Well, it does now, but in the future, if they go to proof of stake, it doesn't. Does that hurt its commodity? I don't have the answer to that, but does that hurt its commodity
I think
status?
it just kind of goes down to the thing where every regulator on earth just thinks everything is
yeah.
theirs just because they see it. You know?
Yeah,
I don't think
kind of
there's
a random thought about
necessarily any rational argument there.
Yeah. There's like, all right, as long as they can make money off of it, it's good, and it's in their like purview, right? Everyone wants their little cut. Let's see.
Talking about CFTCs and like weird financial things, derivatives.
Yeah, so we'll go Bitcoin, some mixed news in the Bitcoin space. So some bad news for the financialization of Bitcoin, and it's something that's I got bamboozled by this dream a couple years ago. I thought like, maybe by 2016 or 17 or 18, we would have some type of Bitcoin ETF, retail ETF, which would allow someone with a typical brokerage account to
E-Trade or whatever.
E-Trade to invest in Bitcoin without holding it, and it would track the Bitcoin price. And almost every attempt has just been shut down. And yesterday, I think the group Bitwise, and I think they partnered up with someone else. And these are groups that have a lot of experience in financial markets and institutions and kind of the regulatory infrastructure. And they've actually put out a lot of good research about how real the volume is or isn't, and then yesterday they just get hit hard by I forgot what regulator put out some guidance basically saying hell no, but it was like 120 pages, of why. So I don't even. It would take too much time to go through exactly what all the arguments were, and I'm sure Bitwise did their best to show that Bitcoin is a mature market with good pricing, but the regulator is still like, nope, get the fuck away. We can't, your evidence for a mature market isn't good enough. So I don't really know what the next step is for that, but another ETF, another dead ETF. But in good news, in the futures markets, Backed, which is people are pretty excited about because it was the first instance of physically settled Bitcoin futures contracts, which means that you could actually take physical delivery of Bitcoin, right? So instead
I find that terminology very funny because
but in the sense that you can actually take delivery of the private keys, right? Because you can't, and technically you can never actually hold the Bitcoin because it's in the Bitcoin memory.
A typical futures contract would be something for like wheat, where it's like, I'm going to buy wheat in December
for $100.
Yeah, to run my cracker mill. So the farmer knows he can plant his crops and grow his fields, and then when he harvests it, he knows there's a buyer.
He can cut off his risk and give his risk to a speculator.
Yeah, and I know that in December I'm going to get my wheat so I can run my cereal manufacturing or whatever. Mm-hmm. And that's kind of the idea behind a futures market. Now, of course, people will buy the future wheat thinking that they don't actually want wheat because they don't really make crackers or cereal, but they'll sell it to a cracker producer closer to the date and make some money off of that or something.
Yeah, so the story with Backed was they had a huge increase in volume the other day. The day before, or I think it was yesterday, the day before they only had 25 contracts traded on their platform, and I think each contract is worth 1 Bitcoin.
Okay.
And then yesterday, like all of a sudden, like 225 contracts traded at about 9,000 a piece. So you do the math, pretty good, a decent volume, and it was their all-time high. So we're seeing a little more activity in the traditional financial markets. Who knows? I don't know who the parties were. It could have been miners, right, trying to lock in a certain price. It could have been just, speculators trying to speculate on the price of Bitcoin. But we're seeing more activity on a institutional product.
It still cracks me up that it's physically delivered, because it makes sense in the case of a wheat futures contract that be physically delivered the wheat.
Yeah.
But a Bitcoin futures contract is, I'm going to be physically delivered the Bitcoin. Well, that terminology comes from the old. It's not. No, it's just not physical.
I mean, none of it fits, right? We're trying to make it fit, and
we're taking the round peg of Bitcoin and putting it in the square hole of traditional. Like, it just doesn't fit.
Hey, at least it gives us a lot to talk about. And then I guess for our last story, we actually had a pretty, I guess, a more feel-good story for Bitcoin and Ethereum. UNICEF, which is the United Nations Children's Emergency Fund, right? So that's pretty mainstream institutional organization.
Classical.
And they've literally set up a cryptocurrency fund to receive cryptocurrency and to kind of dole it out when they deem appropriately. And I read their press release, and they're like, Yeah, this is what we think digital currencies are kind of the future for the next generations, right? And this is the United Nations Children's Fund. So they're like, all right, children are going to be using digital assets, digital commodities, stuff like that. We're going to set up a fund in which people can donate to us through Bitcoin and Ethereum. And I think the first donations will actually come from the Ethereum Foundation, which holds a lot of Ethereum. So they might be trying to dump their bags on on UNICEF. But yeah, a pretty interesting story there, and another sign of the times, right? 2019, UNICEF is taking Bitcoin and Ethereum deposits and going to be, I guess, sending them out to different organizations or efforts that they support. So definitely a sign of the times again. Let's see. Anything else? I think
That covers our topic
covers
list
it
here.
for
And
today.
So
Yeah.
would we have to talk about what are we up to here? We have our
Let's see.
fundraising going on, so
Oh,
we
yeah, that's
are
right.
we're on Bank to the Future. So if you're in Europe, I think you can invest. If you're accredited
Or
investor,
it's anywhere non-U.S.
Oh, okay.
Non-U.S. accredited investors can invest in Edge on banktothefuture.com. Yeah.
and yeah.
Also, we should update people on Ravencoin.
Oh yes.
So give a little update on what's going on there for any users that are holding Raven.
So Ravencoin did a hard fork recently, and so they upgraded their software, but they did not upgrade the Ethereum software. I'm sorry, not Ethereum, Electrum.
A lot going on in your head.
It's too much. It's
Yeah.
too much. So the full nodes talk amongst each other, and they make the ledger go, and that's all fine. And then there's this other thing that allows wallets like Edge to actually connect to the blockchain and figure out what their balances are and what their transactions are and so forth. And that thing is called Electrum. And they didn't bother to upgrade Electrum when they updated their full node software. So currently, they did a halfway upgrade, right? They didn't finish their upgrade. They didn't upgrade all the pieces that make the network run. And so we're kind of stuck in this halfway state. So we have one of our engineers taking a look at trying to do it himself, but he's not a Ravencoin developer. So, wish him luck, but we're struggling to get that back and running.
So Ravencoin is down. If you really need to use it or send it, you'd have to take it out of our app and sweep it into a wallet or whatever service that does support Ravencoin. If you do want to if you just need to keep it in Edge, it's safe in Edge.
Yeah, their money's still there. It's just not going to sync correctly until we get this solved. This is the problem with us because we actually are trying to be decentralized. We're actually trying to connect to the open networks of Bitcoin and Litecoin and Ravencoin and EOS and all these things. And the problem is these networks being peer-to-peer and open source and everything aren't reliable.
Yeah.
If we ran centralized infrastructure and became more of like an exchange type of a system where we are running the servers that power the software, then it would be much more reliable. But that's not what you guys deserve. You guys kind of deserve to be able to run. Actually, our principle is, even if Edge 100% goes away, like all of our servers get shut down, we're off the picture, off the face of the earth. Lightning bolt strikes us all dead. Your wallet still works. You can still get your money out. Everything is still there. And in fact, you can still send and receive.
I would say that it's definitely more true for Bitcoin.
Yes,
Because there's a lot more public infrastructure available that's running.
Bitcoin
and
is actually
reliable.
one of the few networks that has really good infrastructure.
And that makes sense. A lot more money has been poured in, a lot more time to mature, and a lot more people interested in it. Anyways, I think that does it for today. We covered the IRS, we covered Bitcoin, Ethereum, all the good stuff. Anyways, that's it for us today. We got to get back to work. Thanks for tuning in. Any final thoughts?
Not your keys, not your coins.
Exactly.
That's what we always finish with.
Peace.